those of you who are new here, I recommend you use candle plot MTF indicator to show us some. So here's the thing, right? Let's just look at the candles here, 4-hour candles. So we're working on a 15-minute time frame as our trigger time frame, our trigger chart. The one that will basically give us all the entries and exits, and we will trade in the direction of a higher time frame, such as the 4-hour and plus. And typically what happens is that let's say you just, okay, let's zoom out a little bit. Now you can see how you have candles that are mixed in. So we have red, green, right? And on a 15-minute chart, it looks pretty clean. We have a trendy environment, trending down, trending up, sideways, a little bit sideways. Overall, what you're looking for here are these candles, and whenever there's a pause, meaning we have a green candle on a 4-hour time frame, right, indicated by these candles, it means that you can sleep for the next 8 hours and sleep through the ATR range of a 4-hour candle. So ATR is something that we take very, very seriously here at Cryptopocalypse. Now we look at the average true range for these candles, just to understand like what is the distance for a particular move. How can we measure these candles, and that's by using ATR, of course. That's probably the best way to do so. In your settings on your Armageddon, as you already know, you have check ATR money management. It's off by default because what happens when you turn it on is that you get your chart it gets populated by these bands, which can get a little messy. So this is just a visual aid, but we don't really need these. If for beginners, yeah, you need to have this on because you're still not used to the charts to understand movement. So these can visualize it for you, the ATR distance. But for the rest of us who are using just numbers and sort of eyeballing the chart, these are not necessary and they're off by default. So the ATR will be shown on your MarketSpy, and also you can go to your effects indicators here and add average true range. So this is what it looks like. What it looks like does not matter. However, what does matter is if you right click on the price scale here, you'll have labels, and here you'll have indicator name label and indicator last value label. So if you have this enabled like so, it'll show you like a whole bunch of indicators that are running through this, right? And you want to have name label off. But what you do need to have is, let me just figure this out because I usually keep this off, but okay, it's one of these settings, but it basically gives you a whole bunch of names of all the indicators on the side right here, and it gives you the values they look really ugly when you have it this way, but we have it off to keep a clean profile here. But nevertheless, ATR, you have 204 here on the ATR. If you turn on MarketSpy AR, you will see that the same value or close to it, depending on the calculation, will be shown here on the side. So previous ATR was 203 and current ATR is 194. Slightly different smoothed out calculation method, but nevertheless it's very close to this number. So an approximate measurement of your take profit candle what's a good place to take profit, and that would be this number. So once price moves away by 200 points away from your entry, it's probably a good place to take profit. So we have that enabled on our Armageddon, but for reference we'll just keep this indicator here at the bottom to look at the red number. We can minimize this. We don't need the whole picture. So 204 ATR distance. So on a 15-minute chart, which means each and every one of these candles, there's a potential for this candle to double in size basically from here. And the same ATR value will be found on 4-hour time frame, and it will be a higher value. So if we go to 4-hour time frame, the value for ATR is 1,500. So you can also confirm this by using the auto range function with fill ATR option here. Check, you have 1,000 points about there, which means if we drop, there's a possibility that on the next candle open on 4 hours, we can retrace by as much as 1,000 points, which is not really going to be the case. It'll probably be half a candle, if that, because we have bullish momentum building up. But this is just to give you an idea of what you can expect. And so back to the 15-minute chart, sort of step by step. So we saw this drop, right? Very aggressive standout candles. We know from our experience that when we have these sort of candles, we need to buy those. We need to learn how to buy candles that are very aggressive, and they have volume spikes where people freak out and sell the bottom. Remember, I told you this so many times. And when it happens at the bottom of the range, it's a good sign. It's a good sign because it means that we're bottoming out for our intraday setup, and it's probably a good. So if you go to sleep, and let's say your average sleep time is 6 to 8 hours or whatever, right, for a healthy regimen there, you will understand that the next green candle, because after a dump we probably consolidate and go sideways, so any major move will not result in a continuation but rather a consolidation. So this is where I told you guys that tomorrow we'll probably still be here in this range, because this level is important. We either break it or we break out of it to the upside. And guess what? I cast a ladder in front of you, and I said I'm going to get a fill. And I use the ATR range of the 4-hour candle. So basically this, the size of this candle went down, picked me up, and I woke up, I was in profit. Here, it went down again, I rescaled, it picked me up. And the reason I did that is because when you see these small, tiny candles, you can expect a little bit of sideways movement. Then comes a time when we get a huge 4-hour candle, and it's game over. Basically, everyone's like, "That's it, we're dumping. It's game over." Of course, volume increases at the very bottom. Most traders, they freak out again. They sell, they short the very bottom. We form a divergence because the market is not sure if this was indeed the bottom. So you have to understand what people are thinking here. And they're thinking, yeah, let me try, but I'm going to exit early. Sellers will try to push lower to see if this is indeed support. We form a divergence, buyers step in, and now we have a little bit of volume that's coming from the bottom of the range. So consolidation, dump, consolidation, and a little bit of volume coming in here, wicks. So on a 5-minute chart, sometimes when we talk about wicks, it's hard to find something that looks really good, like this over here, for example, right? But in this case, we have two. This is a spinning doji here, which is a reversal candle on 4-hour. However, like I said, we need to give it some space, and usually price needs to consolidate. So instead of rushing into this instant reversal, sometimes it does happen. Sometimes in extreme bullish cases, you have a candle and then followed by another candle. But since we don't chase, we actually prefer for it to consolidate, go down, and then show us a sign of life, so that we can take the trade. And so no trading here. we're on vacation, we're waiting for this to play out. We see the first green candle, which means the next few candles most likely going to be sideways. Now during this sideways price action is what gives us the luxury of we're either sniping the drop on the mega candle at the bottom, or we're looking for great, now okay, we're good. Or we're looking to consolidate and then let the market decide for us and tell us whether we're going to continue falling or not. So we see that we have a triangle, and this can go either way, right? We have a target here. This is what's come next, right? I was able to wait this out, and I saw that we had some overthrow volume here from the buyers, and it's just volume in general, but it happens to be a bullish engulfing candle here, and the sideways candles remain the same. They're not extending, they're not and they show us wicks, indecision, and then on momentum here there's already a divergence. So it is likely that we go breakout, retest, and then go higher, and this is the final target here. So based on probabilities, this is what we're looking for. We're not really jumping right inside of this trade, but here comes the next part. While you have 1, 2, 3 candles in the making here, after a big candle comes a consolidation, meaning you have time to prepare your next move. And the market usually does the opposite of what everyone thinks it'll do, right? And this could still go down, but we're just like, you know, we're trading in the direction of the actual trend. And here the market is telling us that it wants to go higher based on these two candles here. So indecision, 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 but in favor of bulls because we have a divergence, and it's actually playing out right now. The divergence is playing out, and now we have finally a lower high, higher low, I'm sorry, higher low. GPS dots, right? You know that we were oversold 15-minute. This happens to be the place where across all the other time frames we have a C dot crossing up on 1 hour, 2 hours, 3 hours, and then finally we had a GPS on a 4 hours. So that many dots and that much confluence across all time frames is really good for our probability guesstimate about where we should go next. Okay, so you're like, I'm gonna get in here. How do I actually execute this trade now? Because I have assessed that we're going out. What else could have helped us here, probability-wise, to tell us that we're going higher? Well, I used DSR in my case as my third opinion algorithm to validate or support my ideas here. So inside of DSR, I had enabled settings such as, so for example, my SR time frame was set to 1 week. And I had enabled a quick OHLC scan, which is open, high, low, close, abbreviated by OHLC. So this scan, I don't know if many people use this or not, but I find it useful, and I set it to 1 week. So 1 week is showing us, just close this. So you see these huge lines. Remember this is the high probability CPR level, this yellow line, which means we come back to this level. Maybe not on the same day. As you can see, we had just come back to it now. This is our destination here. But what's happening is that you have an open, which is the equivalent of a weekly open here is like an intraday open and close, and we bounce between them. We crawl and make our way towards the daily open and the daily close. This gray line, can't read it, is close. It's not really important because the close of the candle doesn't really mean anything. We need to have an open and see what direction that open is going to take us in. So weekly, right? This is what I was looking at while sitting here. I zoomed in like this and I looked at these levels. I looked at specifically this R, S, and P, the pivot over here. Since both of my settings on DSR are set to scan for weekly support, I know that this will be a strong support. Okay, so open, weekly open. How is this determined? Well, if you go back all the way here, you can see that this open is on the close of the weekly. So once a candle closes, the next one opens. So weekly closed right here and it pumped, went sideways, and now we came back to the open or the close of the weekly. Does that make sense? We came back to it, so we should technically find some support there because these levels are usually packed with liquidity and people are sitting there waiting to participate in this trade. We also have weekly support. I was able to identify this weekly support when uncertain. If you want to use a bigger time frame and you want to find an absolute bottom, you can go to your MarketSpy DSR. And while we have the CPR that acts as a daily range support and reversal pivot system, we also have our classic show SR levels. And when you toggle these, you can see the green line. Just move to the side. There they are. So green is support. White, right over here, is pivot. And then this pink level here, R, is resistance. So that was interesting. That was a lot of fun for me to look at this and assess it. And so the reason we were failing here and why 59,500 was my level. Let's activate my drawings here. And you can see this purple line. I kept talking about how, see here it says no daily close above 595 bearish buys here. So we failed and we finally crossed down. There's the Armageddon ribbon and the 200 moving average on the 15-minute chart. We finally, for the first time, closed and crossed below it with a bear cross away from the pivot. So the closer the cross of the moving averages to a ceiling or a support, the more bullish it is. If this cross would have happened here, we would have pumped all the way back and probably smashed through this previous ceiling because of the lag. And so the market would at that point be a little bit ahead of itself, and it would give us enough spring action to catapult and shoot higher. But here we had resistance. We are scanning. We're going down. And based on this open here, here we have the pivot, okay, weekly pivot, which is the low. And then that's previous week, right? So now our resistance is above the previous high. Sits at around 67, 65. And to be honest, I think it's now that we had this a little bit of correction, there are higher chances now that we can potentially finally run this level at 59.5. So looking at all this data here, it seems like it's a little bit overwhelming, but it's not. We go down and we find support at open. We find weekly support at around 55,300. We go and use the horizontal tool here, and we draw a line, and we say weekly support plus monthly pivot, and we draw a line here to indicate that this is, if we're close to it and we're reversing, yeah, we're probably going to bounce away from it. So we mark all that on our chart. We also have the low. So you can see there's a cluster of support. Now on the intraday, here's when things get interesting. We start forming this divergence here, which is very nice and clear. We have a little divergence. And we have a higher low. And this higher low it put in the low, but it also closed above the yellow high probability pivot line. CPR, high probability inside CPR. So anything between the pivot daily high open and S1 is your inside intraday potential range where you're going to be spending this today and tomorrow. Okay, right here. So this is the volatility constriction bottle here where all the action is going to be happening, and you need to be able to navigate this and survive inside of these inside CPR levels. Now the actual CPR is, now we're above BC. There's TC, and so this is a high probability level. Can we come back down to it again? I think so. We just looked at the 4-hour ATR chart, and this is why I have my orders scaled in to have a refill here and then have another bounce. I don't think we break down below this level just yet and go lower. But that's for later. We're going to have a cross here soon, and price is way above that cross. Way above it, which means we're going to correct down towards it as it crosses. As the bullish cross happens, price will collapse, come back down to this level. We activate our drawings and we see that we have a little buy box set up and ready to go in advance. We can anticipate that by looking at these indicators and understanding how the bots will drive this. So every bullish signal will get faded. It will be a valid, that's why you get a dot, a retrace, and then a continuation, because the algorithms are pricing in the lag of these indicators and the fact that most traders will act on signals live as opposed to taking a step back, assessing, and then striking. So they know that, and that's why a lot of the signals fail if you're trading the buy and sell indicator, or if you're trading like the dot or the pyramid right there, right then. Without actually looking at your levels first. Okay, so what does this all mean? This is how we find support. You cannot argue with this. We're just not going through. There's smart money sitting here. They're gonna buy. So we start planning here. The way we plan is we have clearly identified that there's support, right? And now we're thinking maybe it's worth a shot. Maybe we should have a position here. Now this is interesting because I know we're not going lower. Where is my target? Now the target here is the orange line, which dates back to, I don't know where it's coming from, but we had it here forever, and we do this in advance so that in the future we don't have to worry about new levels. We use historical data here to go all the way back and see that this level clearly was support, resistance, support, resistance. So it's not a resistance support level, but it's a very interesting level to flirt with, and so that it's a magnet level. There's something interesting that's happening there. The market is attracted to that level for some reason, and so it's going to keep trading in that direction. So this is how we arrive at this dip and impulse up conclusion. So let's break down the live chart and wipe this all off once we understand. So this was the line that I drew. You know, price it's very easy to draw these squiggly lines. You can see how price moves in steps. So 8 candles up, 2 candles down, 3 candles up, 4 candles down, 8 candles up, 3 candles down. So it's got this symmetry, right? And it's making its way up. We have momentum that's supporting it. The divergence here, remember this line? Let's get rid of it now since we know what that is. So we have a divergence here, and there comes our entry. Now, for an entry, we can't, I mean, you can, but you have two things happening. Yeah. So you have your baseline reclaim here. Dump, we seem to have reclaimed the baseline here, but if you activate your 4-hour time frame candle, you can see how this is going to be first attempt, and it's failing, and the next one that opened here, it went up, it was green, then came back down, and so we have another indecision candle. Remember that one time in the bootcamp where I said it's almost like you're the first to get like like say an Apple device that is just brand new. They have come out with their own M1 chip recently, right? It's not Intel anymore or something. Apple developed this in-house inbred chip that they use to now power their devices. And the first generation is probably going to be like, meh, so. Then the second version comes out and it's going to be beefy, upgraded, all the bugs are ironed out. So think about these baseline first initial signals as sort of like, yeah, it's there, but to have a confirmation, to have a second consecutive baseline reclaim in a row is much better. We'll come back to this part over here in a bit. But still, based on ATR, your holding period for any given trade on a 15-minute chart is 1 to 15 to 8 candles. So between 1 and 8 candles. So if you're long here, you go on a retest. There's 1, 2, 3, 4, 5 candles that are going sideways. That, you know, in our trades, when we have a reclaim and a continuation, it just goes on. A quality signal, a quality trade just keeps on going. There's none of this. This is showing you that the market is showing you hesitation. It's not sure. It doesn't like it. And your position here on the retest of the baseline. So reclaim, retest, no diamond, good to go. Maybe you were here, maybe here. If you were here and price went down and started going sideways, you better put an exit at your break even, because it's not a quality trade. If it went down and retested and you went long and you see H bear, it dumped and it produced like this candle, you should be out as well. 4 candles later, no movement, don't like it, get out. It's not good. Now, what comes next? Well, you're like, okay, I'm gonna wait it out. So you wait it out. You have another reclaim, but not really. Closed without a full-bodied candle above the baseline. You need a full-body candle above the baseline for it to be a reclaim. You cannot just peek its head above it and then go back down. You need to have so a reclaim, a little bit of green here, full candle, 1, 2, 3, retest, and momentum is looking good. VVS is starting to show strength after all this yellow here, relative strength post GPS. Your entry is here. This is now the wave projection that you're seeing. Now, how do you draw this? You quickly go and squiggle, and you say, okay, purple line. We're probably going to hit it, either close above it and rest on it, or get rejected, go lower. I have baseline support, and then we'll attempt to break it. And surely, sure enough, we have a signal here that closed above the purple baseline, and it happens to be a MAG7. And this MAG7 is almost like a double MAG7. You have one that's setting up here. It's a little broken, it's not perfect, but hey, that's why you take the risk. If you rush into it, you have 1, 2, 3, 4, 5, 6, 7, 8 candles that are profitable. First sign of resistance, you're getting out 90%. You can always rescale. We have to stick with the rules. This is why we have this template that I have shared with you, because this is going to save you a lot of headaches in the future. A mirror image of this baseline reclaim retest. Remember, we're not looking at the 4-hour candles, right? I'm just talking about the 15. We have a reclaim, retest, continuation, first sign of resistance, exit, 10% runner, entry. So what about stop losses? How do we a stop loss? Look, if you have identified a setup where you have weekly support, you don't care about these fluctuations there. You don't care about it going up, down, slightly lower above your entry, behind your entry. You just know that if these lows get taken out and we close here on at least a 4-hour candle, so if a 4-hour candle, this red candle, goes here and closes here, you're out automatically, because this would continue falling really fast, really hard on momentum. Okay, from this acceleration, consolidation, breakdown, it's going to really spill. So you will manually close this whole thing by pressing this button here, market close, and just call it a day. and say, okay, this was a failed setup. We're now entering a bearish setup where we can expect continuation lower than the weekly support, which means we're looking at the monthly support next, which sits at around 47. Yeah, 47 all the way down there. If we lose 55, simple as that. But for now, it's good. And so you're not really placing a stop loss here or here, but you're using this to estimate the contract size that you're going to have, as if your stop loss was on the lowest of the lows, on the pivot, swing failure pattern, or any one of these basically candles that have a long wick is where you have buyer support that have your back, that will not let price get close to it. Why? Because it was probably a good area to go long, and people who gotten in early, other traders see that, they start entering here at the top, right? And they're hoping, there's a lot of orders now sitting here, and the market will not come down and give you a second chance to get in on this absolute low. Otherwise, what would we have? We have like a straight line where everyone is getting in here, 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 and then suddenly everyone is rich. The market doesn't work this way, so it will not allow you to, and this is why it's the best place for your stop. As for the trade and size calculation, you have to figure that out based on your own personal risk profile and appetite. But the pattern here is that reclaim, retest. Now notice I'm not looking at any of these symbols here. I'm not talking about act on this square, act on the reversal pyramid, even though they're all profitable here. These are not signals. These are reinforcements that come into play on the 2, 3, 4, 5 candle surprise element. So once you have an entry here and it's going up, you have a retest, bang, pyramid above the baseline, momentum, you just kick back and you know that this is going to be a power move and you can plan it. Now, certainly if you were late to all of this, if you did not identify any of this stuff that we're talking about and you're just looking at this dip, you know that this is the second baseline reclaim. If you're not sure, wait for it to close back above the baseline, go up, boom, GPS signal, another retest, another green dot above the baseline 4, baseline 3, baseline 2. All of the baselines are basically conquered here with strong momentum at the bottom. Very strong momentum. With a 4-hour GPS dot, green pulse signal dot on 4, 3, 2, 1 hour, all of them have a GPS dot. You just can't go wrong here. So now you can execute your entry here, here, or here. The best place to enter is when the diamonds disappear. So we have a diamond train here. They disappeared, entry. Disappeared, second best entry. Disappeared here, very close. You're not entering because in your mind you're thinking, okay, 2 flags close together, 2 candles. If I go long, momentum is going down. Maybe there's a correction. What other baselines can I have? So you have EQ1, EQ2, and 3 are together. A little bit of conflict. Maybe this is the right zone. Why is this the right zone? You turn this on and you see that this is now possibly resistance. Resistance flip to support is somewhere around here. So you draw this box and you get in on this box as your next refill area. This is the most interesting territory here on the price, because you have a bunch of mixed signals and baselines, but you have to understand that momentum was very strong and this cool off period is only natural. And so couple of entries here to execute on is 1. So just like the baseline, so this is a fast baseline, this is a slow baseline. Purple is slow, green and red is fast. The market is going to mirror. I want you to take a look at this, all within a circle. Reclaim, retest, retest, impulse. Now I want you to look at this bigger brother here and see what happened here. Purple, reclaim, retest, retest, impulse. You see what I'm saying? Do you see all this? Look at that, it's very simple. This is a mirror image with a bigger, badder baseline that is now backed by volume. This baseline calculates volume as well. And certain pairs that don't have volume on exchanges, certain Forex and gold and stuff, you will not get this line. But case in point is that you have a symmetrical mirror image on a strong uptrend supported by oversold momentum across multiple time frames. Where do you execute on your trigger chart? Trigger, 5 minute, 15 minute is a little bit noisy, but that 15 minute gives you time, because you can sit through 4-6 of these 15 minutes, and that's going to give you a nice little area where you can study the chart a little bit while you're trying to execute that trade. So you're automatically, blindly, you have these signals, right? Yellow X, green dot, below baseline, pyramid. What do we say about this setup? It's a short, but the way you enter the short is that price goes up, HC, entry, continuation, ATR value, exit, $200 later, away from your entry here on the green candle. Remember, you're selling the green candles, you're buying the red candles. How you do that is very important, but you're never market selling into the candle that looks like it's going to continue lower, or as soon as you can. There's no FOMO. Dump signal. Price goes up, we build a short position. Price goes down, we close it. Now, your next entry is in EQ3. So purple baseline, you can have an order waiting for you right here, or you can have a scale position from by identifying this box. So from here to the top of these candles, you can have a multiple laddered position built up in this region here, like this. Where to? We have two lows. Maybe connect the dots and say, okay, somewhere around here, somewhere basically up to this level, I can get in on a little long. And now this may bounce only this much, or it may bounce this much, right? We don't know. By the way, we have a correction happening now, likely. So we're going to be placing orders from below the deck. All right, so and then you have your, so in terms of Armageddon, you have your whole setup presented to you. You just need to see through all this. Now, another important element that I look at personally is when I have a flag. So if I get 4 to 5 flags in a strong uptrend, it's coming to an end. One of our members here, QQ, gave us an important tip about how to identify the end of a pump. Baselines. Interestingly, when this cross happened, these baselines never crossed each other again. So this is kind of like your trigger. Huge retest, a little freak out incident here. It went a little bit lower than expected, but still, if you went long here, which by the way, on my other account, I went long, and I ended up staying underwater for a day on that account until later today when I was able to come out at break even and then position myself accordingly. So it's okay, but you have a signal that you have to understand that the market is going to come back to you. If you entered a little bit early, that's fine. No problem. So you went long here on the retest. Okay, went underwater a little bit, but technically this crossover here indicated that it's game over. This dump is over. 2 squares over here are also telltale signs that are telling us that, yeah, we're slowing down. We're slowing down. So even if you went underwater here, it's fine. You had to wait just a little bit. I mean, it's 1 4-hour candle. I literally went away, played with my kids, came back out, and it was done. In the meantime, I was setting up for another trade, this one here, to take us to this level, first level. Now there's a little bit of base, and this was my previous key level of interest here that I played, and so it's natural that we come back and take a pause here. Hopefully you're following along so far, and this makes sense. So trading this possible pause here based on the weekly support and monthly pivot, And I was scaled all the way down in this blue box as well, just in case this went up and then suddenly dumped, because we've seen those before. It could have happened. It didn't post this. So I had a scale order here that would bring my average down to about here. So this was fine. We would still come back and retest the monthly support pivot once before continuing even lower. So I had a bunch of orders to back me up here just in case with the rest of the market. And then I canceled them because there was no need for them any longer. So let's get rid of it. So here we go. We have our entry right here on the retest. That was my entry here. Get rid of this box. No need to have the explainer. Then I projected a possible scenario where we have baseline reclaim, retest, baseline reclaim, retest, and finally a continuation. Now, this was based, okay, this level here was based on two things: TC, top center, center pivot, and bottom center on the CPR, on the daily pivot, which looks wide and thick, which is nice. So here's where we take profit at TC. We don't know if this goes higher. For sure it went higher, but like I said, between 1 and 8 candles. The reason it has to be 1 and 8 candles is because there's a well-known system out there called, and it's not really reliable, but the name of it is Sequential by Tom DeMarks. He has this algorithm similar to MarketSpy, but Tone Vase says we're going back to 1K. He uses that indicator, and as a result, we never went back to 1K. So that indicator, its premise is that after 9 consecutive good solid green candles, we tend to see a correction. Okay, it's not always true, but they figured out that that was the average. And I tend to agree that for someone who likes to trade casually and consistently, you don't need more than 2-3 candles. For me personally, 2, 3, 4 candles, that's a very good trade. And you can get these trades with MarketSpy blindfolded, basically. If you set up the alerts and just start to understand what is happening here. So if your entry is on the retest here, 1, 2, 3, 4, 5, 6, 7, 8, 9. So you're exiting right here, maybe post entry setup. So that's a really nice 5-pointer here. As you can see, 400, 500 points, which is pretty sick. But we wait for the flag. So here I mentioned in the live chart that as this is happening and we hit the target, I said take profit and congrats, you survived. And so I'm saying I'm thinking of holding through a few yellow flags, on this 15-minute chart. No stops. Because why the hell would I need a stop here when I have a ladder here? I've already secured some profit, and I can add a small position on possibly a flip here. Laddering on momentum to maintain a position. So this is where the laddering comes in, to maintain the position on momentum. So strong momentum, obvious little correction here. Our member QQ said that, watch this baseline. It goes, boom, it crosses right here. You see, they flipped. So that's the end of the pump. It's very early, and it's an amazing exit indicator. If you ever needed one, this would be the thing to pay attention to. So this crossover here is so beautiful that post-cross, you still have some price action that fakes out and traps a lot of people. And you know that this is a good level to now be out of. So momentum. To maintain a position, you re-ladder here or in this box, or entry at your baseline, or entry at the moving average, or entry at your support based on these 2 pivots over here. So very flexible situation that we find ourselves in. 2 nice decisive candles. They're not just small dojis, they're momentum continuation candles, right? So yeah, we will have a 4-hour cool-off period and scale in, and as soon as it goes up back to the top of this candle, we will exit. So if our entry is here and our exit is here, that's another four-pointer, maybe 5-pointer. Plus you can hold a little runner and it goes higher. So very good. This flag, the first flag, dragon skin dip, when price, it's a checkpoint, so it goes into the first flag is usually on a reversal momentum, is not a reason to panic. It's a yellow flag. It's telling you warning, things to come, but it's also a place where you want to buy and continue. So next, so bonus, this candle, this one single candle is the equivalent of like 2 15-minute ATR candles. So with one candle you're killing it at 2 times ATR distance, which is really good for a trade if you can get in. And with MarketSpy, very easy to do so. If you get in on this on these diamonds pyramids, so red diamond dip, buy, red diamond dip above the baseline, buy, red diamond dip, buy in EQ1 or the dragon skin or the magnetic ribbon. It's up to you. The world is your oyster. So we have that nice capture, instant exit, because we know that this is our take profit area anyways, but this one little flag here gives a warning. Now the second flag, and I find when they're close in proximity like this together, this simply means that this momentum is now starting to act up a little bit. So sure enough, it was a bear, regular bear divergence here, and we go down. So what I think here at this point is that you see this line, I draw it like this and I say we go down and we impulse up. That's what is likely to happen. This is what I'm looking for. How do we arrive to this conclusion? How can we actually say it so arrogantly that this is what's going to happen? Well, we have very thick support on... There are things going on 30-minute, 1 hour that are bullish as well. So a little retrace on a 15-minute is not a problem. So we can assume that if we dip down to this level, this is going to be a liquidity pool where we have a support flip. So resistance, resistance, support, and after that, there's going to be a lot of money that's going to come in. Sure enough, we see the first huge candle above our waterline here that breaks out, picks up on the wick. Instant stop placement is right here if you ever wanted to know where to place a stop. It goes back up. We have an impulse here, and unfortunately no retest of the baseline. This is a secondary reclaim away from the major bottoming reclaim of the baseline. This is sort of a continuation. Very few chances for it to stop and go lower. A lot of momentum. A lot of people realize that they missed this and now they want to be a part of it. So any chance, any fat candle like this, they will buy into it. So we plan this ahead, and then we have a target. So let's get rid of this. Let's get rid of this now that we know what happened here. Bonus. So thank you flag, 2 times ATR, exit, excellent. Finally, what I'd like to see for the runners. So we get in here, we exit here at the first sign, because remember, this could have hit the ceiling and went back down. So we exit here, and the runner can continue going up, but we're watching for a bear div. We got our bear div right here, bearish divergence div, and this is the final destination target. We're so close to it. What's here? Why is this the final pivotal moment for us to watch here? Well, first of all, this was the major meltdown from the previous range that we were in here. So it's a point of breakdown here against the purple baseline, where we failed to reclaim it multiple times and ultimately fell to our death to the bottom of the range, of the bigger time frame weekly range. So in this case, we're going up, and we can see how we have our white line here, which sits somewhere around here, and this is basically the target, because that tends to serve as a magnet. Now, as an extra bonus here, as an extra sauce, I went to the previous top over here, sitting at 60k, local top, localized top, right? And then I went to this area here, and I selected anchored VWAP right here, VWAP, anchor VWAP right here. So we placed it in here, and it showed us. It's not reliable, I find, but it's supply. Basically, it's supply. It's an approximate area of where people who are selling to the top, where are they likely to sell next if price makes it towards these localized lower highs. It'll probably be somewhere around here. So we're watching this level because this is a point of rejection right here. This is where the supply is. Now, interestingly enough, if you went and used VWAP, by the way, don't ever call this yellow delta momentum line here VWAP. This is not cipher, okay? This doesn't make any sense. This has nothing to do with VWAP. I don't know. It's so slow. I can't show it to you. It's very slow right now. There's a lot of calculations going on in MarketSpy AR, I think, in the background. So, anyways, you could have used this line, and it showed you a little bit of support here to add more evidence that we had reached our weekly support period where we could rely on and trade up. So now we're facing supply. So this candle is going to struggle to go up, and I think the orange line is that one impulse that we go to. I mean, I'll show you what's going to happen next, but for now, let's continue tracking this. Okay, so far we made it to this level. Okay, good trade altogether. And here we are. We arrived at our destination. We're now very close. Do you have to wait for this absolute number here to get hit or VWAP? No, you could probably take profit now. It doesn't make a difference if your entries are on these baseline reclaims. That's the first sign that you're looking at for a continuation signal. We also have a monstrous divergence here. So this is first going to go up and then going to slam back down. Remember, this is first going to go up for supply in order for it to go down. So technically, in a classical setup, you would actually be shorting somewhere around here at 58.5 or thereabouts, meaning previous range. I have actually drawn a box here, which I am planning to short if we come up to this level. But then again, it's also dangerous because I have identified a unique pattern which I think has the potential to finally make that prophecy of taking the previous highs become a reality. But we're still ways away from that, and we're going to have these tricky environments where we'll need to navigate with care. So does this make sense? This is how just a quick review, because I'm recording this. I hope people can come back and reference this. I think this was a great example post dump where we have so many confluent signals here that we can act upon to make this happen. So after this, so that's your core setup, and now for this retrace, we're looking to buy this level. And potentially a little. So I would say that if I had to scale in, I would not place my orders here only. I would actually scale between this box and this box in this zone. Okay, something like that. So lots of surprises that are coming our way away from this level, since we just made a new fresh bounce here. So now I haven't actually looked at what's next, but probably a good time to prepare and see what's our next trade after all this. Are we actually going higher, or this is it and we reverse and go back down and take another pause, and then maybe come back up. So these things take time. Now, based on these candles and this momentum, I think we have one more cooling off period, but it's probably going to be a bit messier than normal. It's not going to be a clean step pattern there. So we'll review that together right now, but let me pause this video because I think I have explained the setup pretty well. We have seen what DSR was showing us at the time, how to use pivots. The video that I had on mapping support and resistance on YouTube, somehow I think there was a copyright infringement on it for music or something like that, but I need to get it back, and it's an excellent way, probably the best way I found to map your support and resistance, because it's so clean and clear. Let's clean it all up. So inside of these 4-hour candles, remember, you have that time. You have 4 hours to plan you can't screw this up. You have 4 hours to plan your trade. You have 8 hours to cast a ladder, wake up to a profitable position. So if you have green here, cast a ladder from here to here, get an entry averaged out over here, wake up 8 hours later, and you're like sitting over here with a nice gain of a 5-pointer also, all the way to the hitting up this baseline here, the Armageddon ribbon, and take profit, and you know, and start your day fresh. And now you have that outlook where you have taken a little bit of profits, and you're not necessarily ready to start trading again, but you're more positive, and you're thinking, okay, this is not so bad. It's a good start. It's a good omen for what's to come. If you have a losing trade, close it, walk away, step away from it 2-3 days, come back later. Just to give yourself some healing time, because you can't make good decisions on bad performance. All right, thank you for watching. This is the core trade setup for any time frame with MarketSpy. You're looking at a couple of things. First, baseline reclaim. Good, that's your signal. Start looking for planning your exits. Sit there patiently in the trenches, wait for a retrace back to the baseline. Make sure the momentum supports it and it's not going to fail. Get your entry in. Be flexible with your stop loss. Use it to calculate position size. Add to it later if it picks up. 2, 3, 4 candles if they're looking healthy. Don't be afraid to add to them and continue riding that wave. Wait for the flags. First flag, if it doesn't fail, that means we'll reach the second flag, which is going to give you another 300, 400 points away from the first flag entry, because momentum is strong. Third, fourth, fifth flag, be careful, trend is coming to an end. Watch for the baseline crossover. So baseline 2 and baseline 1, when they cross, the pump is over, the dump is over. Once again, candle plot MTF, an essential indicator that you need to have on your charts. If you ever wanted to use X-ray vision, this is it. It's not about tensor charts or exo charts or looking at the books are crooked anyways. Like everyone, they're opening, closing trades, whales. They know you guys are looking at those things, so it doesn't really matter. Play it level by level and trade it together with the quants in the direction of where most algorithms would act on these signals, and a high probability setup like this, you just can't go wrong with it. So here we have baseline, line crossed, the pump is over. Now this is an overextension, exuberance. This is going to retrace all the way down, and when these two baselines cross, that'll be your signal. And as a matter of fact, right now it's already crossed, and so this has the potential to take out all these gains back down to this level. So don't be longing this because you're ignoring flags, and just because your Mag 7 setup, make sure that it happens at the tail end of a red continuous setup like this.